Hi everyone, Scott Kinne here, First Heritage Mortgage. It's Friday, October 10th. Getting ready for a long weekend, Columbus Day weekend. Hope you make good use of it and it doesn't rain on your parade. I want to give you a little update on what's been happening in the mortgage market. The bond, it's been on a nice run for about the last couple weeks. And I think we finally hit our peak. If you look here to the side and click on the chart, on the mortgage bond chart, you'll see that the bond has had a nice run up and finally has hit its peak yesterday, took a big drop down, and took another drop today. I think we're on the downward slide now of the most recent wave. If you look at the bottom of the chart, there's a stochastic chart. And it's got two lines running through that chart. And you'll see those lines going up and down. And I've highlighted two areas, one being yesterday and one being a while back, where the two lines cross, and they cross above one of the upper lines in the chart. So when they cross above that upper line, that's supposed to give us an indication that basically the bond price is considered overbought, overpriced, and that the chances are at that point that the bond price is going to take a drop down. How far? We don't know. We've seen it take some big runs, we've seen it take some little runs. If you look at that chart, you can see a while back it took a pretty big drop down following that crossing over. We've just hit that crossover yesterday. And again, the bond price went down yesterday, went lower today. I expect, unless anything major changes, it could go a little bit lower before stabilizing. So I'm just trying to introduce some ideas, help you understand what's happening in the mortgage market, show you what kind of indices I watch on a daily basis, and giving my advice to my clients on whether they should lock or whether they should hold and maybe try and ride a wave up. The easiest way is always lock in as soon as possible. Now, one of the big programs that's really making a lot of headway for us these days, trying to bring some first-time home buyers into the marketplace, is again, looking over here to the side, there is a chart or a flyer for our 3% down, no MI program. Great program. Right now it's running 4.25% as an interest rate. I think it's now got a half a point cost on that loan to obtain, but no mortgage insurance. Now, I just finished meeting with a young client, a young couple, looking at trying to get into their first home. They fit within the income limitation of $86,500. They're looking for a low-priced home, trying to keep their mortgage payments under about $1,800 a month. Well, it ends up, in their case, we had a couple options, VHDA, FHA, or this new 97% no MI program. VHDA's lure is no down payment. Great. But they set restrictions, debt-to-income restrictions on it that are much more tighter than anything else out there. And they also have a little higher interest rate, plus the mortgage insurance usually required on FHA, both monthly and annually. So the monthly payment was much higher on that program, but they could get in with no down payment. They luckily had some parents who had some money and could gift them to meet the 3 or 3.5% down payment. So I ran the options on the FHA versus the 3% down program. FHA, being that it can qualify a client up to a much higher amount, maybe a 50% debt to income ratio, qualified them up to about a $300,000 house price with 3.5% down, and they came across with a mortgage payment close to $2,100, a little bit more than what they really wanted to have. The 97% program ended up having a monthly payment around $1,800, which is what they wanted, much more affordable, and that's prior to the tax advantages, which dropped it down to a $1,500 rent equivalent rent payment, and really was well within what they wanted. The debt-to-income ratio, it wasn't as flexible as FHA at 58. We're going to hold it 43, but that only dropped them from a $300,000 to a $275,000 house. Being in the area they're looking, they think they can find something that meets that. But it saved them over $300 a month in their mortgage payment. So they're going to be a very ecstatic clients, not having any mortgage insurance, and hopefully their house price will increase. Hopefully you've got clients that are in this same situation, and I look forward to helping them. Remember the keys on this program. They must earn less than $85,600. This is geared for the Northern Virginia marketplace out to Winchester. Check on the flyer. It lists the counties that we'll lend on. And it must close before December 31st. So if you've got some clients, we can get them closed quickly on it. Otherwise, have a great Columbus Day weekend. Hope you make good use of it, and I'll talk to you next week. Thanks. Bye-bye.